Member for Nipissing.
Thank you very much, Speaker. Pleased to be able to rise for the next hour and have a discussion about Bill 177. Speaker, this fall economic statement is nothing more than a pre-election house of cards. As we dug deeper into the numbers, it's clear that the Auditor General and the Financial Accountability Officer are absolutely correct not to believe any of the numbers in this book. By the government's own admission, the economy will underperform many private sector forecasts for 2017, which had growth at 3% or higher. So despite the government's narrative, it doesn't line up, Speaker, with the fact that growth is slowing as we speak. Yet they're still somehow predicting a $10 billion revenue increase this year alone so they can balance the budget. Speaker, none of this adds up. We wonder, why do the Liberals continue to thumb their nose at the legislature's independent experts who say the budget is not balanced? Well, the experts have been clear that the government has been using one-time revenue to fluff up their budget. Money from the Hydro One sale, well, that's over now. Money from land transfer tax, the housing market is cooling, Speaker. From federal transfers, well, that fluctuates year to year. So now, and those all together are in the billions of dollars. In fact, each of them alone are in the billions. So without these massive one-time revenues, the government still says annual revenue growth will be 4% over the next 4 years. But the Financial Accountability Office says it will average just 3%. Doesn't sound like much. However, the difference between 3% and 4% in a budget of this size is billions of dollars. We're billions of dollars apart from what the Financial Accountability Office says we should be. So again, Speaker, none of this adds up. If the independent legislative experts don't believe the government's numbers, why should Ontario's families? Why should we ever believe any of the numbers we get from the Liberals? Speaker, by almost every metric, this government has underperformed since the 2017 budget. Actually, revenues are only up $115 million, nowhere close to their forecast, yet expenses are up $215 million since the budget. Personal income tax and health premium revenue is down. Now, Speaker, it's down almost $2 billion since the budget came out last spring. Yet they still say revenue is going to increase somehow by $10 billion. It's a made-up number to artificially balance the budget. So we have these rosy, glowing projections from the government, but in reality, the numbers just aren't there. The truth doesn't fit with the government's narrative. You have to continue to ask, why does it always take the Auditor General, the Financial Accountability Officer, or the OPP to get to the truth in the province of Ontario? Speaker, reading this book, the Fall Economic Statement, it's like reading a fairy tale. I have to say that to you, Speaker, because everything inside it is made-up stories. It's just wonderful little made-up fairy tale stories. Speaker, they don't, if you look in the financial section, they don't use the Financial Accountability Officer's numbers as a starting point. They don't use the Auditor General's numbers as a starting point. They use their own made-up numbers to start and then fluff up the books to show a balance and a surplus at the end. It's a fairy tale, Speaker, and it makes for wonderful reading for Liberals, I'm sure, but somehow we've got to be able to start dealing with facts in Ontario, Speaker. So I'm going to talk about 4 words, Speaker, that are very, very serious words from the FAO, Financial Accountability Officer, and the Auditor General, the AG. Speaker, it's called unlikely assumptions, significantly misstated. Those are quotes from the AG and the FAO. So when you look last month, there were 2 reports. One was called blistering, and the other was called scathing. And that's by just about every media in Ontario. So when you look at the Financial Accountability Officer's commentary, the title of the commentary, Ontario's Debt Reduction, Commitment Based on Unlikely Assumptions. That's the title. That says it all. That should just tell you everything you need to know. Unlikely assumptions. The numbers that they've put in here are not going to happen. They're unlikely. They've made assumptions here that are just not going to happen. The Financial Accountability Officer predicts our net debt will increase by $76 billion over the next 5 years. That brings us up to $392 billion in debt, Speaker. Remember when this government took over, it was in the $139 billion range. Well, today it's $392 billion. It will be over $250 billion, almost 3 times what it was, Speaker, when they took office. And that's very significant. I mean, it took 137 years to get it to $139 billion, and they've tripled it in 15 years. Well, it'll be more years by the time it's tripled. They're also going to raise the net debt to GDP. It's a complicated expression, Speaker, but it's going to be raised to 40.3%. It talks about how much debt that you have, your net debt to GDP, to your growth in your province. And so what you really just need to know is that it used to be 27%. When this government took office, it was a healthy 27%. They continue to tell you, why I'll tell you that was healthy, because even this government continues to tell you their goal is to get it back to the pre-Liberal number of 27%. But right now, Speaker, it's on its way to 40.3%. That's alarming, Speaker. The targets that this government is using and announcing, now those are based on achieving a balanced budget every year for the next 12 years. That's why the auditor, or that's why the Financial Accountability Officer had said, that's an unlikely assumption. That's not going to happen. It's never happened before, and it's not going to happen again. So why would you tell people that's what we're basing this on? And here's a quote from the FAO. He says, if any of these relatively optimistic assumptions fail or fall short, well, the government's 27% debt to GDP would not be achieved. They go on to say achievement of that 27% target is based on unlikely assumptions. And again, the FAO said, for the past 30 years, Ontario has rarely achieved successive balanced budgets. Speaker, let alone 12 consecutive balanced budgets, especially from these guys. So his final words are unlikely assumptions. Now let's jump to the Auditor General for a moment. The title of the Auditor General's report, it's as equally blistering as the FAO's report. Her report was called Ontario Government Understates Annual Deficit and Net Debt. That's the title of her book. Ontario Government Understates Annual Deficit and Net Debt. That paints quite a picture. Just the title alone paints quite a picture. So she, for the second year in a row, which is unprecedented in Ontario's storied history, she issued what's called a qualified opinion of an audit opinion. Now, what is a qualified opinion? You can only issue a qualified opinion based on the audit evidence obtained, the statements, I'm reading a quote, are significantly misstated. That is very, very serious in accounting terms. You're misstating numbers. That, you know what that means. It would be unparliamentary for me to take it even a step farther than that. So this is what she has done. This is the Auditor General has told us those other two words. Remember the Financial Accountability Officer? Unlikely assumptions. Auditor General, significantly misstated. Boy, I'll tell you, those four words together, any of those two phrases together, if you were a private company, you would have the regulators in here looking at your books from top to bottom. That's how, and we have our regulator. We have one. It's called the Auditor General, but they disparage the Auditor General at every turn, Speaker. So when you imagine, she has told us. So again, this book, this fall economic statement, has numbers in it. And this is a quote, the statements significantly understated the 2016-17 deficit as well as the province's net debt. So, Speaker, she's telling you the numbers in here aren't right. The Financial Accountability Officer told us the numbers here aren't right. Why would anybody ever believe for a moment that anything that's said in this book? So, the auditor went on to describe a little bit. This is so serious.
Point of order, the member from Barrie.
Speaker, I believe the word misstated means lied, so I believe that should be withdrawn.
I believe the L word wasn't used, and misstated is probably a softer interpretation, and I rule that it's okay to go.
Speaker, that significantly misstated has been presented in the floor of this legislature it's been tabled by the Auditor General of the Province of Ontario. That's in her book. Anybody can open the Auditor General's book, tabled right here. It's in the books that are tabled here, Auditor. So I have issued, here's what she's saying, I have issued a qualified, remember qualified means that it's significantly stated, I have issued a qualified audit opinion because the statements were not prepared following Canadian Public Sector accounting standards. So the Auditor General has warned all of us, quote, the legislature and all Ontarians must be able to rely on the province's consolidated financial statements to fairly report the fiscal results for the year. This year, they cannot do so. Can you imagine a company, what would happen to their stock if their Auditor General or if their auditors came out and said, you cannot rely on any of the numbers that are in that report? And that's what the auditor has told us again. She went on to say the deficit, now she's getting specific, Speaker, the deficit was understated by $1.44 billion. That's just this year's deficit. And the net debt was understated by $12.429 billion. $12.5 billion for both 2016 and 17. I mean, that is unbelievable. Again, if you were a company, your stock would be gone. You would have a run on the stock. The regulators would be in there, and they'd be looking at the seriousness of what you've done. So really what's at issue are two things now. So we've got the earlier track, which is all about the pension funds, surpluses. This government thinks they can raid the pension funds and use the pension surpluses as their money to fluff up their books. So if you can imagine, you've got a set of numbers, and now you've got two tracks of numbers. The Financial Accountability Officer felt it important to report one set of numbers that they believe are correct, and another set of numbers. Can you imagine, Speaker, that they've actually printed this little chart out to show that they've had to branch off into two sets of numbers because they're so far apart between what the Financial Accountability Officer says is correct and the Liberal Party. Now it jumps to get even more complicated because each of those two branches now has two branches of their own. Now we've got this tentacle, this web. Accounting should be straight line, up and down. There's no ifs, ands, or buts. 2 + 2 = 4. End of story. But in this government, you've got a two branch, and each of those now has two. And what those two branches are all about is the treatment of the so-called Fair Hydro Plan. And here's what the Auditor General said why we have to take two more branches now. Quote, the government inappropriately recorded the market account of the independent electricity system operator. Oops. It was done inappropriately, but it was also done by design, Speaker. It was not an accident. I'm going to get to another report in a moment that talks about just how nefarious this was. It was done by design. So again, she is saying the books are significantly misstated. Now, we can break that down a little bit more, Speaker, and get into the Auditor General's next report, where this is a month later now, where what the Auditor General revealed is that the government created a complicated financing structure designed to keep the true cost of the so-called Fair Hydro Plan off the province's books. It was going to cost a lot of money, and they didn't want anybody to know, A, how much money it was going to cost, and B, how they were paying for it. All they wanted to do was make sure it didn't show up on their books so they could have this fake balanced budget, this fluffed-up number. Their plan was to keep the numbers off the books so as not to show a deficit and not to show increased debt. And they didn't want to show that this decision would cost Ontario families $4 billion more in interest costs, as this off-book structure that they built doesn't have the same borrowing power as the province. So you can imagine, Speaker, they wanted to hide the fact that this thing was going to cost about $40 billion to do. They wanted to take that money and they shuffled it right across the street over to OPG, Ontario Power Generation, which the people also own, and they have their thumb on, and they co-opted them into doing this. I'm quite sure the people at OPG had no intention of ever saying, I got a great idea, let's take all this debt on and not tell anybody. This is a typical Liberal move, Speaker. That's what this is. So not only have they gone across the street and co-opted OPG into doing this, we then learn, because OPG can't borrow money at the same low rate that the province does, it's going to cost $4 billion more just in interest to hide that from our books. But now we say to them, the Auditor General has outed you. Your secret's out there. We now know what you were going to do. You don't have to do this anymore. She's going to make you record those loans on the province's books. You're going to do that anyway. So why go through with your charade of trying to hide it and pay $4 billion more? That's just being stubborn, to go through with that charade and put families $4 billion more into debt. How is that strong and fair for Ontario? How is it fair to make families pay $4 billion more now, absolutely unnecessarily? Your secret's out. It's been blown. Everybody's figured this one out. You got caught again. And now you have a chance to save $4 billion. Are they going to do it? Nope. They're not going to do it. So in the auditor's summary of concerns, we learn that, here's a quote, "It is clear that the government's intention in creating this accounting financing design to handle the cost of electricity rate reduction was to avoid affecting its fiscal plan." That's what she said. That's her quote. Quote, "The intention was to avoid showing a deficit in the province's budgets and consolidated financial statements, and to likewise show no increase in the provincial debt." End quote. I mean, that's how serious. That's sneaky, Speaker. That's all that is. That's just plain sneaky. You want to do something, you want a pat on the back for doing something, this so-called fair hydro plan, when there's nothing fair about it at all to the next generation and the one after that, and likely the one after that, Speaker, who will now have the bill for all of this, and a highly inflated bill. The Financial Accountability Office told us that bill may be, because we have to borrow, because we're in deficit and we don't have that money in the bank to go and pay this, we've got to borrow, it could add another $93 billion. That's a number from the FAO. So think about it. Earlier, I mentioned that our new debt number in Ontario